Yo, what's up, guys? I hope everyone is good. I hope everyone is lit. I hope everyone is chilled. How was your day? How did you guys find the first recording that I recorded for you? Hope it is lit. Hope it is lit. So yeah, on today's topic, this is what we're gonna be dealing with. We're gonna be dwelling into what technical and fundamental analysis is. Is it you already understand the process of buying and selling between the customer and the buyer, the seller and the buyer, like I explained yesterday. So yeah, today we're gonna delve into technical analysis and fundamental analysis, just trying to understand it for like a minute. So now coming to like a mini explanation, I'll just start with technical analysis. So once you guys hear the term technical analysis, you know, obviously, if you are a trader, right, since we deal with buying and selling of shares, or either what you call forex or commodities. By commodities, we're talking about your gold, your silver, you know, those are commodities. So let's say you're buying and selling stocks, and obviously you have your FX chart here. So basically what technical analysis is just basically trying to read this chart, just looking at the past and then trying to predict where the market is gonna go, trying to predict the future using the past. I don't know if that's making sense, but yeah, that's what goes down in technical analysis. And mostly our education will be mostly technical analysis based. And then when it comes to fundamental analysis, which is obviously this side, it means you are trying to predict the price, whether it's gonna go up or down, using what we call news events, or economic calendars. So economic calendars is an economic calendar is a calendar that gives you the dates about the statistics that are going to be released on a particular country. If maybe we're referring to forex, that means they could be every month. They usually release what we call GDP. I'm sure you guys are familiar with GDP. You guys did geography in school. If you didn't, hey, tough luck. Just Google GDP. But yeah, these are basically what you call the news events. So basically every day, not every day, but yeah, every day basically, every country has specific data that it releases to the public to show how it's doing, how it's performing in terms of certain aspects of its economy, right? So that is the forex side of things. So now you use fundamental analysis to try and predict where the graph is gonna go. It could either go down based on the news, or it could go up. We don't know, but it all depends on how we analyze our chart, whether we use fundamental analysis or we use technical analysis. They are all tools to analyze the what you call I think I misspelled technical, or I wrote it correctly, but yeah, they are all tools used to analyze where this graph is gonna go basically. So now what we'll do is, another aspect I need to mention is you can also use news that you watch on television, like I don't know what news you guys watch, your CNBC or Bloomberg or E News Prime Time. Some of you all watch SABC News. You can also use that, to try and predict where the market is going. You can read maybe articles as to like what's happening, then you can try and make a decision based off of that. But in our section, it's not what we'll be doing. What we'll be focusing on mostly is what the technical analysis of things, and we will be incorporating some fundamental analysis here and there, but they won't be that dominant. What will be more dominant is the technical side, the technical analysis, so yeah, just so some of you, let me do this. I know it's unnecessary, but there's some people that like to understand stuff in detail. Yeah, let me just do this. Yeah. Okay. I mean, I like being creative, guys, so don't blame me when I edit these mini thingies that look like they don't matter. To me, they matter a lot. I like detail. I like nice things, you know. I like nice things, so, and order. So yeah. Now, okay, technical analysis, fundamental analysis. So for now, I'm just gonna show you a quick aspect of the fundamental analysis as to I mean the technical analysis as to how you should understand how the market moves, you know. So obviously we know the market it ranges in different aspects. It either goes down, up, or down, or up, or down. Could go down, it could go up, it could, you know, it's just random. You cannot really predict the market. Anyone who tells you that they can predict where the market will go, they're lying to you, chief. What you can do is you can try to speculate. It's called speculating, that's the term. For those of you who don't know how to write speculate, I'll just write it for you here. Speculate. So speculate means basically trying to predict where the market will go. Not necessarily predicting, but trying to predict, which means basically you're gathering information, then based on that information that you have, you're trying to make a decision whether the information is saying the chart will go either down or will go up, you know. So yeah, now coming to the deep aspects of how we analyze our market, since we know that the market is always going up and down because of supply and demand, you know. You remember that thing where I told you that when the market goes up, okay, let me just start it like this. Let's say price is here first of all, so that you can get a better understanding. This is the price, $2,573. Yeah, $2,573. So let's say the price is there, right? And then obviously, like I said, increase once you see the market going up. That's when you know that the price of something, of that certain asset that you're trading, whether it's stocks, whether it's a stock, or whether it's what you call a forex chart or a commodities chart, which once you see the price going up, that means it's rising in value. It's that thing where it's kind of like the owner of the shop is increasing the value of the product that they're selling, you know. And once you see price going down, that's the other way around, which means it's losing value instead of gaining value. So now, since the market obviously is random, and let's say right now the market keeps on going up, obviously we start to see specific aspects of the market forming as the market starts to move, you know. Okay, looking at this weird chart, I know like the actual chart doesn't look like this, but I'm just making a demonstration, so yeah, don't slaughter me there. Obviously you see that, okay, this thing is going up, right? And once it goes up, at some point it has to come down. That's just how the market works, you know. It's a balance between buyers and sellers. If the market, everyone keeps on buying and buying and buying, we have to have a point where we have people that are selling. We have people that are selling so that they can be able to when they're selling, in other words, we have to get the value to reduce, the price of whatever we're trading to reduce, right? If maybe the price has been here, if it kept on increasing and increasing forever, obviously it will get to a price where it's too expensive and no one will want to buy it. So hence, that's why the market tends to come down and so it can become cheaper. So which means it's like that lemonade stand when you start decreasing the price so that you can attract customers, right? So they can start buying again. And once it comes down, what happens? We look for we look for buying chances once the market goes down. So remember this rule. I really need you guys to remember this rule that I'm about to share with you right now. In the market, one thing you should learn, right, is there's this concept called buy low and sell high, right? So okay, what does this mean? This means if your thingy, what you call the asset, whatever asset you're trading, once the price is cheap, you buy it. You look for places to buy it. Once the asset is expensive, you look for a price to sell it at, because it's expensive, right? So once it's expensive, you're looking for a sell. And in the market, when you're selling something, basically what you're saying is, okay, if for those who are still like beginners and don't understand the concept of buying and selling, basically, to put it in a nutshell, when you are buying in the market, right, let's say you decide to buy here, let me just say buy, yo, I don't know what is that, let's say you decide to buy here, right? Okay, you decide to buy here, which means what are you expecting? Which means you're expecting the market to go where? To go up. And if the market goes up, if you buy and the market goes up and it gains value, buying is more like you're investing in something. So once you buy and the market goes up, what happens? You make profit. You understand? And if you buy and the market goes down, I guess someone will be crying at that time. Then you're gonna make a loss. So when you buy, you're expecting the market to go up, and if you buy and the market goes down, you lose. So it's a game of trying to predict. That's why I use the word speculate. You understand? So now another term that I'll need you to understand is this: sell. If you sell, your spelling. What is the spelling odds are against me today? Someone there is probably casting some spelling spells or whatever they call it. But yeah, let's say in the market you decide to sell. Right? When you're selling, which means what you're saying, you're expecting the market to go down. And if you sell and the market goes down, you make profit. But if you sell and the market continues going up, you're gonna cry again. You're gonna make a loss there. So hence I structured these on purpose. That's why I put the buy here and I put the sell here. So which means what? Since the market is random, if I buy at this point and the market goes up and then it keeps on going up, right? Keeps on going up, keeps on going up, and keeps on going up, I know my market is not picture perfect. And then you decide to sell here. Let's say when the market reaches here, you decide to sell. Then the market, once it goes down, that's what you're expecting. You see, does this make sense? Yeah, when you buy, you're expecting the market to go up. When you sell, you're expecting the market to go down. This is how you make profit. If by any chance you happen to be in this situation where you buy here or you sell here, you are going to cry. I'm not lying. You will be donating your money to the markets, and we don't want that situation, right? We want a situation where everyone is able to try and make as much and milk as much money as possible they can from the market. Excuse my English. I know sometimes it does flop here, but yeah, you get my point. The aim is to what? Buy when the price is low. This is price, by the way, and this is time here, down here. This thing down here shows time. So this is the time. So going backwards, it's showing the history, and coming forward, it's showing what's gonna happen afterwards in the future. Or you get my point, right? So the aim is when you buy low, you're expecting the price to go high, so that when the price gets high, you can be able to sell it, so it can come back low, so that once it gets low you can buy again, and then once it gets high you can sell again. So basically it's just basically this trading is all about this whole process repeating itself, buying and selling. You understand? I hope I'm making sense, folks. So yeah, but for now, with technical analysis, that's the gist that goes down. Basically we are trying to predict where the market will go using the past. So going on to an actual chart. Okay, let's look at this chart here. We can see here, okay, our market is going in different directions, right? It's going in different directions. So at this point, based on that example that I gave you earlier, or not the example but the demonstration I just gave you, like right now, where are you supposed to buy? This is the spot that you're supposed to buy. It's here. Buy. Okay, let me turn it like this. Do it like this. Okay, let's do it like this. Ish. Shout out to Legend Rocky when he used to say, okay, let's do it like this. But yeah, this is gonna be our buy here, where we're gonna be looking for buys once the price is cheap. If we ever wanna sell, we want to be selling at this price here, at a higher price. You understand? Sell. Okay, color, say that like my details, guys. This is where we'll be looking to sell, you know. So yeah, buying low, selling high. When we sell high, we're expecting the market to go away, to go down. When we're buying low, we're expecting the market to go up. If it happens that it's the other way around, you sell here, like I said, and you buy here without proper risk management. I'll come and explain proper risk management at a later stage once you guys have advanced. But yeah, if you sell here and this thing goes up, this is what I mean when I say you're gonna cry. You're gonna lose a lot of money if you don't know what you're doing. And if you buy here and this thing goes down like it just did right now, you're gonna what? Lose money. So basically, let me just turn this like this. Yeah, so you see. Okay, let me just take it back to this. Yeah, but yeah, you get the concept of technical analysis, right? It's basically buying and selling using what? Using the thingy, what you call the price, using the chart, the raw chart, or there's some things called indicators. So which means I would, since the market goes in two ways. Yeah, this is another thing I need you guys to understand. The market goes in two ways, right? It either goes where? The market either goes up or it either goes down. You'll never see the market going backwards. It always goes where? It goes up, goes down, goes up, goes down, goes up, goes down. So yeah, your job is to try and find when will the market go up and go down based on what? The chart, on the way it's moving. You're looking at how it's moving and you're trying to predict where it's gonna go. That is technical analysis. Understand? So which means since you see that here it went up, then it came back down here, then it went up here, then it came back down here, then it went up here, you're obviously gonna expect it when it comes back down here. You're gonna expect what? Yeah, there's a higher probability of the market going up. But since you're not the god of the markets, there's a high chance it could go down. Could what? Do this. Let me just do this. Yeah, could do this, could go down, and you see, and so and forth, and so and forth. I hope I'm making sense, right? So yeah, for today, that's what I'll be giving you, and yeah, I hope you understand how it goes down with technical analysis. And fundamental analysis is basically what? You reading the news and be like, okay, you come into the news, they say something about make something, what you call, they make a report. Maybe let me make an example. Let's say they write a newspaper article about your lemonade stand. Let's just assume this guy is you, Mark Zuckerberg. Yo, that's a vibe. Yo, if you're Mark Zuckerberg, send me an e-wallet of, I don't know, 100 million nyana here and there, so that I can ball as well. But let's say this is you, and you are selling the lemonade stand, and they wrote maybe here, so and so your lemonade stand has made this amount of returns, and it's looking good. It's positive. It's good news about your lemonade stand, about your company. What's gonna happen? Your company is gonna be in high demand, and then hence it's gonna gain what? It's gonna gain value, which means if this was the chart of your lemonade stand, the lemonade stand would what? Let me just do it like this. If the price was here right now, and they said something good about your lemonade stand, it would go up. The price would go up. You understand? And if they said something bad about your lemonade stand, the price would go down, obviously. So that's how fundamental analysis works. You're basically reading the news, looking at the data, and yeah, by data I mean those numbers, how an economy or a company is performing. They usually release that data here, and we will get into fundamental analysis at a later stage in the mentorship group, but we won't dive too much into it since we are mostly technical analysis traders. We trade technical analysis, which means we analyze the charts. So yeah, otherwise I hope everyone is good, and I hope everyone understood what I was saying. If you guys have any questions, don't be scared to ask. Don't be shy, man. Don't be shy. Comment, talk with me there on the group. I'm there to help you guys, and yeah, stay blessed, and yeah, keep on behaving there. Shout out.